Welcome back after the break. So, before going to the break, we were discussing about the returns based on past data, future, based on future data, so on and so forth. Now, the person who had come to convince me that, sir, please invest in our company from your salary, I almost got convinced. I almost got convinced. It was like, sir, we are giving you 36.7% returns. Now you tell me, 36.7% is a decent return? Yeah. So I told him, I agree. The 36.7% is a very, very good return. So, okay, give me a day or two's time. I'll just go through my finances and I'll then invest. So he went back. Now tomorrow again I get a call. Tomorrow I again get a call. Last time it was from HDFC Mutual Fund. Now I am getting a call from Axis Mutual Fund, Axis Bank. And this time they are saying me that, sir, sure shot we will give you a 36.5% return. I'm like, oh geez, oh my God. It's the same return that even HDFC promised me. And now even Axis is promising me the same thing. Again, I called them for a meeting. They gave me their past returns. And I could see that, yes, they are also earning an average or expected return of 36.5, 36.7 on an average. Now, I was zapped and I was totally confused. So therefore, I thought, now what should I do? I called up my chartered accountant friends. That's you, my boy. Yeah, that's you. So I called you, my chartered accountant friends, and told them that, I'm confused. I'm earning surplus money. I want to invest. I'm confused between Axis and HDFC. Both are giving me around 36 to 37% return. What do I do? And the very wise advice that I get from y'all guys is that, sir, Mr. Sankalp, that return is just one side of the coin. Then I asked them, what is the other side then? You have to ask the risk, or you have to calculate the risk as well. And that is where I thought, OMG, I don't know how to calculate the risk. So that's where my friend told me, don't worry. So you have two investments, both yielding almost similar returns, but that is not all. Let's now calculate the risk and see the other side of the coin. Whichever will be less riskier is what then we can, finalize on. And I was like, yeah, that's a fair thing. One which is same return but a lower risk, that will be better. So first I should know how to calculate the risk. So now I'm asking you all, please, will you help me to calculate the risk, everybody? And yes, very generously you say that, yes, sir, why not? So now, returns part is done. Now what we are going towards? We are going towards calculation of risk. Why do you want to know the risk? Because there can be two shares, equities, or there can be two securities having similar returns, right? For me, risk is also important. So let me see what is the risk content and then probably take a decision, right? So here, if I write X, I'll just take that example, which is already available with us. So example 1 was there with us. So if I write here X, how much is the X that I'm getting? Minus 27.5. First is only minus 20 minus. So say minus 27.5. Then second is 52.5, 61.43. So say 52.5, 61.43. And then 28.1, 69. Have I written the numbers correctly? Correct? This was my X. This is my X. Now, what X bar did I get, or what average return was I promised? Well, the X bar based on the formula sigma X divided by N was approximately 36 point, how much? It was 36.7%. 36.7%. Now. If, yeah, correct, 36.7%. So now ideally, I should get an average of 36.7 returns, right? Now what exactly is risk is? The risk is basically the deviation from the average return. The risk is basically a deviation from the average return, right? So do we understand this? I'll make you explain the simple thing. Just a moment. Risk basically is the deviation from what? Deviation from the average return. Now, if I get 36.7 return, will I be happy or not? I'll be very happy because that's what I was promised. And if in today's world you give what you promised, then that's what you want. But if there is a deviation, what is the scope of deviation that is possible? So in the first year itself, I thought that my return will be 36.7. Now based on past only my future is predicted. I have gone with the past analysis and I have accordingly predicted my future. So if this trend continues, I am expecting 36.7% return. But how much return am I getting? Tell me. Can I say it is 27.5? Right? So can I say there is a big deviation? That deviation is nothing but my risk only, no? I was expecting 36.7 and the return that I've got is negative 26.7. Oh boy. So, are we understanding? So, in short, can I say I will have to calculate this deviation for every year? So, how will I calculate this deviation? Tell me, how will I calculate this deviation? Can I say it will basically be the deviation from the return I am expecting minus the return that I am getting minus the expected return or the average return that I am expecting. So, can I say basically I am doing x minus x bar? Everybody, yes or no? Okay, tell me how much is this? So it will be minus 27.5 minus 36.7. How much will this be? Bolo, tell. Is it minus 64.2? Fair. Okay, others come on quickly. Next calculations I'm expecting from you guys here. Come on yourself. Yeah. Next is 52.5x minus x bar 27.5. Tell me how much is this? It is 25. Mega Lakshmi. 36.7. So, okay. So, 52.5 minus 36.7. It is 15.8. Absolutely correct. Then 61.43 minus 36.7. 24.73. Dina did not get your point. Okay. Can somebody tell me the total? Can somebody tell me the total? I will tell you. Even without calculating, this total will always be 0. You may get 0.03 or something. That's just a rounding off error. But ideally, this total will always be 0. Yeah, guys. A mathematical statistical property, man. Now, we see this basically, can I say 36.7 is nothing but the mean? Suppose on a number line here we have a mean of 36.7. How have we calculated? Few numbers more, few numbers less. Now eventually when I reduce from here, I add from here, eventually we will get this, all the inter numbers will get set off and we will get zero only. No yaar, are we understanding? So therefore it was then thought that this x minus x bar, ideally yes it is the risk, but this risk will always result into a zero, not giving a proper answer. And hence if we want to reach to a proper number which is not zero, we will have to square x minus x bar. We will have to square x minus x bar. So come on, quickly do this. X minus x bar square. And this x minus x bar, the square, is from now going to be called as x minus x bar the whole square summation divided by n will be called as variance. So 64.2. See, now there is minus 64.2 and again will be multiplied by 64.2. So what will happen? Minus minus will get cancelled. So 64.2 multiplied by equal to 4121.64. Guys, please start using your calculators smartly, guys. 64.2 multiply equal to m plus 15.8. When you do multiply equal to, it multiplies each by the same number, m plus 249.64. 24.73 multiply equal to 611.57 m plus 8.6 multiplied by equal to m plus 73.96. Last 32.3 multiply equal to, please check my calculations, 1043.29 m plus, and then you press MRC, it will be 6100. Am I right, everybody? Tell me, guys. Am I right? So, yes, everybody is getting the same answer. Please, somebody do the calculations and tell me. Done? Okay, now pay attention. See. So this we've got x minus x bar, but we've done the whole square, right? Now this 6100 is for 5 number of set of numbers, right? But we want again average risk. So what will we do for finding out the average risk? Correct. So x minus x bar, the whole square, of which we have done the summation, divide by n. So it will be 6100 divided by 5. It divides 6100 divided by 5, and that will be equal to 1220. 1220. And this, ladies and gentlemen, boys and girls, is called as variance. There is a variance, no? Variance means to vary. There is a variation from x and x bar. So this is called as variance. But we don't need a variance. We need risk. Unnecessarily you have squared everything. So in order to get to our original risk, we will do square root of variance, and that will give us standard deviation. So the last part of the calculation is standard deviation, which is root of variance equal to root of sigma square. Sigma, this is sigma. Dina. Or we can also write as root of x minus x bar. root of x minus x bar, the summation divided by n. All in all, standard deviation can be represented as this. Okay, and that will be 1220, the root of that, and that, ladies and gentlemen, is equal to 34.9. That, ladies and let's take two decimals, so 34.93. This is your risk element. This is your risk element. A subject to everybody. So, what is the formula that you have derived? What is the formula that you have derived? Correct. Now we are calculating the risk and the data that we have taken, that is past data or future data, that is past data. So if a risk is to be calculated based on past data, it is nothing but it is sigma, also called as the standard deviation, which is nothing but the root of variance. But now, sir, what is variance? So sigma square is your variance. So what is sigma square? Sir, it is x minus x bar. See how I am saying x minus x bar, the summation raised to square upon n. Are we clear, everybody? Logically, systematically, guys? Bolo bolo, tell. Gotcha, everybody. Sa. Right? Done? All yours. All yours. So we have to calculate standard deviation, but we cannot calculate the standard deviation directly, and hence we take the support of variance. What is variance? This is variance. And if you want to denote, you may just denote x is return, x bar is average return. Please copy. Once it is done, let me know. You would want to copy this. Please copy, and then I'll check if any doubts or anything. Yes, guys, done. Please keep on informing me that you guys are done or not. I'm waiting, I'm waiting, I'm waiting, I'm waiting. Okay, so now what does the sir? So what is this 34.9 that we have got? This is the risk. So but what is this risk? So I'll tell you. We are expecting how much return? That person has come to us and told us, sir, you can expect a return. You can expect a return of how much? You can expect a return. How much return can you expect? Sir, you can expect a return of 30. Sorry. 36.7. 36.7% return, that is what you can expect, right? There are chances again that instead of 36.7 we may also earn at this 34.9, or we may even land up with this. Yes, this is what this risk is trying to depict, that there is a upside and downside potential. See, our brain is wired from the birth in such a way that for us risk is always negative. No, risk can be positive as well as risk can be negative, both. Negative, to we know by default we use the word risk. There's an implied assumption that we are thinking that things will go wrong only. There's a big risk, yeah. There's a big risk. So we don't say, yeah, man, there's a big risk. We always say there's a big risk, yeah. So why do we do that? Because there is, by default, we feel risk is negative. Not necessary. Risk is positive as well. Could go either ways. So now, is your heart ready to manage this risk? It could even go this way. It could even go that way. That is now what I will ask my investor. If my investor is young, he may say, okay, let's take the deal. But if my investor is probably a oldie goldie, then in that case, I will never subject him to this level of risk. Are we clear, everyone? Gotcha. So this was about your risk calculation. This was about your risk calculation. Risk is standard deviation, but you cannot calculate standard deviation directly, and hence you take the help of variance. Variance square root of variance is your standard deviation. Now, the whole risk calculation was based on past data. The whole risk calculation was based on past data, but we also have our future data with us. So can I say we'll use the calculation for that as well? So let's continue with our example only. So our example is ready. Where's it? Yeah, our example is ready, right? So as per our example, it is x bar is 15.2, x into probability is what we've got is 10, 2.4 and 2.8. So I'll just write this down. And then we will try to calculate the standard deviation and variance for this aforesaid you can say question. So let's start. Just a moment, I'll just copy this as it is. Sure. Now, this was our example. So I'll just write here our example. This was there. Now we have to calculate the risk for this example. We have to calculate the risk. So I'll just give a heading risk, but based not on past data, but based on future data. Risk. based not on past data but on future data. Now, we have already calculated X bar. We've already calculated X bar. How much it is? It is 15.2. It is 15.2. Yes, everybody? Right? Now, we know the formula for variance X minus X bar, but that was for past data. This is based on future data. So obviously here, because there is probability, we will also take into account the probability into picture. So let me begin. So here it will be X. First I'll just write down X and then we'll write down X bar, or rather X minus X bar. Okay, what is X? 10, 2.4, 2.8. 10, 2.4, 2.8. Yeah. Then we have X minus X bar. Tell me, what is X minus X bar? So can I say it will be 10 minus 15.2. So it is minus 5.2. Come on, do the rest calculations and tell me quickly, everybody. Correct, Dina? Tell me. Next is yeah, tell me. Minus 5.2, minus 12.7, minus 12.4. Sorry. We have to take X. 28.14. You have also taken that one, I think. 28.14. Come on. So calculate as per that X and X minus X bar and tell me how much does that work out to? 28.14. Positive 4.8, negative 7.2, positive 1.2 maybe. Yes? Negative 1.2, I guess. Done. Then we do the square for this. Okay, let's do the square for this. And then we will multiply it by the probability. So X minus X bar, the whole square. So now this is actually a longer way, but because this is the first sum, we'll do it this way and then I'll teach you the shortcuts as well. Please, X minus X bar, the whole square. Do it. Yeah, 4.8 multiply is equal to 23.04. M plus 7.2 multiply is equal to 51.84. M plus 1.2 multiply is equal to M plus 1.44. Got it? Now we have to multiply this by the probability. So probability percentage is given to us. Yes, tell me. 50%, 30%, 20%. So 0.5 I can write this. 0.3, 0.2. So 23.04 into 0.5. Yeah, is 11.52. Then 51.84. 0.3 is 15.552. 1.44 into 0.2 is 0.288. Am I right? So this is probability x minus x bar the whole square. And now we will do the summation. So we will get variance. Variance is equal to, so 11.52 plus 15.552 plus 0.288, 27.36. And now if we have to calculate the standard deviation, will we be able to calculate? Yes sir, it is root of variance square. So 27.36 squared of is your 5.23. So this is fairly less risky stock. Fairly less risky stock. Got it, everyone? So when the risk is based on future data, what will be your calculations? Like we did here, can I say we will do the calculation there also? So if the risk is based on future data, it is just a number, Dina, for now. Let me get more into depth of it. Once we do the covariance correlation, then we'll be in a much better way to understand it. Don't worry. Risk based on future data. So here, first the calculation of variance. Tell me what will be the variance formula? Sigma square, which is nothing but summation of, first do x minus x bar the whole square and then multiply it by p. This summation is your sigma square. What is your standard deviation? By default it is sigma, which is nothing but root of variance, nothing but root of sigma x minus x bar the whole square into p. Not sigma, summation. Sorry. Woohoo! Are we done? So, one more level above we have gone. Calculated the risk as well for our client. Either be it on past data or on future data, we are ready now. Are we clear, guys? Please confirm, are we clear? If yes, then now we are all set to solve question number 1. And be ready to get a lot of homework now in portfolio. Let's come to question number 1, guys. If you've written this, please come to question number 1. Not the example. Example you may try by yourself. But now we will come to question number 1. Yeah, please open this. Small changes, please do. So, should I start reading? Given below are the likely returns in case of shares of Sun Limited and Moon Limited in the various economic conditions. High growth, low growth, stagnation, recession. What are the chances that our economy will be in high growth? 30%. Low growth, 40%. Stagnation, 20%. Recession, 1%. Calculate the expected return and standard deviation of return on stock of Sun Limited and Moon Limited. So now here we have two stocks. One is Sun Limited, one is Moon Limited. One is Sun Limited, one is Moon Limited. Can I say now for both we will calculate the return, so we will calculate the risk, which is nothing but the standard deviation, and then we'll be in a better position to compare them. So this first sum will help us to think logically that okay, this is the return, this is the risk. We can then present the returns and risks to our client, and then informed decisions can be taken, right? If you could invest in either stock of Sun Limited or Moon Limited, but not in both, which stock would you prefer? So I think this is where we will start taking decisions as well. Lights, camera, rolling, and action. Question number one. Should I start directly? So this is the first question. I'll start, and then later on you can also solve by yourself. So I'll start. So question one. We have two shares. So what we should do is independently let's calculate Star Limited's return and risk. Independently calculate Moon Limited's return and risk. If there is a shortage of time, we can combine at least the calculation of return for Star and Moon. So let's do that. Okay, in wake of time, saving time, let's combine the return calculation and let's independently do the risk calculation. So first we'll start with the return calculation. The average return calculation, right? So what is what first you have to calculate? You have to calculate X bar. You have to calculate X bar. What is X bar? Calculation of expected return for Star Limited and Moon Limited. For Star Limited and Moon Limited. So there are four possibilities that have been given here: 1 and 2 and 3 and 4. What is the first possibility? High growth, low growth, stagnation, recession. High growth, low growth, stagnation, recession. Done? Okay. Now, how do you calculate the expected return in case probability and return is given? Summation of probability multiplied by the return. Correct? Am I right? So now let's write down the probability in common. Probability in common I'll write here. Probability in common I'll write here. Then we have Star Limited. Then we have Moon Limited. Alright. So we'll start. So probability 0.3, 0.4, 0.2, 0.1. Multiply by the return. Now what return am I writing here? This is for basically Star Limited. This is for Star Limited. So 15, 13, 9, 6. Right. Now Can I say? So star limited's probability into return, right? So 15 into 0.3 will give me 4.5. Then 13 into 0.4 will give me 5.2, 1.8, 0.6. Tell me. Calculations, please. 12.1. 12.1 it is. Then there is Moon Limited also. Same thing is to be done. What I will do is I'll just write here return for Moon Limited and probability into return. Yes? Tell me. 10, 11, 12, 14. Then probability into return. So 10 into 0.3 is 3. 4.4, 2.4, 1.4. And it will be 11.2. Done? Okay. Tell me. So we've got the expected return. Basically your X bar for both star limited and moon limited. So I'll write here X bar, star, moon, 12.1, 11.2. Now, if only return was a criteria for me to decide anything, I will say go ahead with star limited. I will say go ahead with star limited. But return is not the only criteria. Sun limited, okay, it's okay. Yeah, I'm using the word star limited. It's okay. Sun is also a star and vice versa. So happy guys. Okay, quickly calculate till here and then together we will solve risk. We'll solve it together. Come on, quickly write down. Yes, done guys. Now let's start the correct. Oh, people are done with the risk part also. That's great to know. Chalo, now I will start with first calculation of risk for Sun Limited. Okay. First, we'll write down the formula. Tell me what's the formula? A summation P into, well, let's write it this way. Summation x minus x bar the whole square multiplied by probability. Correct? This is your variance and then variance and then standard deviation will be root of right. Let's start. High growth, low growth, stagnation, recession. No. X. See now how we will do it. We will write down x minus x bar. Okay. So then we will multiply it by probability and we will get the x minus x bar the whole square into probability. See here. We will write down x minus x bar the whole square here itself. Multiply it by probability and we will get x minus x bar the whole square multiplied by probability. The total of this will give me summation of x minus x bar the whole square into probability, which is nothing but my variance. Whatcha? Continuing. So x is 15, 13, 9, 6. So 15, 13, 9, 6 minus x bar for Sun is 12.1, 12.1, 12.1, 12.1, 12.1. Okay. 15 minus 12.1 and then the whole square. 2.9 multiply by equal to 8.41 multiply by the say probability is 0.3, 0.3, 0.4, 0.2, 0.1, 0.3, 0.4, 0.2, 0.1. So multiply by 0.3 will give me 2.523. Can I have the calculation for others? LG, stagnation, recession. Come on guys. Yes? Yes, next. Tell me, total is Which one is 0.324? Acha, this one. Let me check. Yeah, 0.81 into 0.4 is 0.324. That's right. Okay. How much is the total? 8.490. That's great. Let me calculate the standard deviation here itself. So root of variance square is my standard deviation, equal to root of 8.490 equal to how much? It is 2.914. Okay. Same way we will do for Moon Limited also. Same way. Right? Same format. We'll use 1 x minus x bar the whole square, probability, and then sigma. Probability is already given, 0.4, 0.3, 0.2, 0.1. Write down the total. HG, LG, stagnation, recession, x minus x bar the whole square. How much is x? Minus x bar. X bar is how much? 11.2. X is 10, 11, 12, 14. Minus, yes, 11.2. The whole square. Tell me, how much does this work out to? Please tell me. How much does this work out to? Please tell me. Final answers, please. 10 minus 11.2 equal to, multiply equal to 1.44 multiply by 0.4 and plus 0.576. 11 minus 11.2 equal to, multiply equal to 0.04, 2.3 plus 0.12. Am I going right or wrong? Please check. Please check, somebody. I think I have written the wrong probability. It's 0.3, 0.4. Okay. Chalo, 10 minus 11.2 equal to into equal to into 0.3 m plus, so 0.432, right? Then 0.04 into 0.4 m plus 0.016, then 12 minus 11.2 equal to into equal to 0.64 into 0.2 and plus 0.128, and last 14 minus 11.2 equal to multiply equal to 7.84 multiply by 0.1 0.784 and yes, we will do the summation. So sigma square variance is equal to sigma square is equal to total of all this, works out to how much? Yeah, tell me. $1.36. Done. Correct? And then standard deviation is the root of sigma square equal to 1.17. I'll just round it off. 17. Now. We will go to our client and we will tell him, sir, there are two companies, Sun Limited, Moon Limited. We will write down the return. We will write down the risk and ask him. See, 1.17 here. The risk average return that we are expecting is how much? It is 11.2. In case of Sun Limited, 12.1 and 2.914. Tell me, sir, what do you want? Tell me, sir. Sir, I'm asking you, sir, what do you want, sir? Which one will you have, sir? You'll have Sun Limited or Moon Limited, sir? See, in terms of return, not much to choose. But Moon Limited has less than half of risk of Sun Limited. So I think we will go ahead with the Moon Limited. Moon Limited, choose Moon Limited. Similar return, low risk. Woo! Gotcha! Gotcha, buddies, gotcha! All yours. How was the question? Enjoying it? Too much of calculations, brother. Please. I think majority of you are done with this part. Yeah. I hope you have written the recommendations. Awesome. But sir, Sun Limited is more na, so you can go ahead with that. I am not saying no. You can also choose Sun Limited. That's not a problem. If for you earning more return is your appetite, go ahead with Sun. No problems. Okay, it's time for us to give some homework before hasta la vista. Wait. Yes. A lot of homework is going to come in this chapter. Be prepared, brace yourself, and better come with the homework done. Okay. See here, company A return and probability is given. We have to calculate expected return, standard deviation, and advice. Will we be able to do this? Correct? So this will become your homework. Continuing. Given below are likely returns in case of Star Limited. We have probability, we have return. We have to calculate the expected return and standard deviation. Will we be able to calculate it? Homework. Definitely, sir. Right? And last, yeah. Again, we have a probability, return. We have to calculate the expected return and standard deviation of return on both stock. And again, which stock would you prefer? Almost similar to what we have done. HW. And the last question that I'm giving to you on HW, question number 5. On the same logic, return, probability, expected return, standard deviation. Hey, subject. So please everybody, 2, 3, 4, 5. 2, 3, 4, 5 is your homework. Better do and come. Yeah, you better do and come. Okay, so just write it here. 1 done. 2, 3, 4, 5 HW. Done. Okay then, time for me to say hasta la vista. But before that, definitely I will want to revise whatever we have done. Yes, cannot be leaving you like that only. No ways, no way. Chalo. So let's quickly revise. Tell me, first we have to calculate the two things, three formulas we have learned in all. 3 and 2. 5 formulas we have learned. No. 1, 2, 3, 4, 5, 6, 7 formulas we have done. 7 formulas we will write down now. Start. First, the 3 formulas for return. First, we will write down the 3 formulas for return. Tell me, what is that? P1 minus P0 plus other income divided by P0 divided into 2 parts. Past data, future data. Past data, what will happen? Summation of x upon n will give us the x bar. Correct? And future data x bar is equal to summation of x, which is return, multiply by probability. Probability. Okay. Now we have risk, again based on past data and future data. We have two risks, two things here. One is calculation of variance, other is calculation of standard deviation. How do you denote a variance? Sigma square. How do you denote a deviation? Sigma. What is the formula here? Summation of x minus x bar, the whole square divided by n. What is the formula for standard deviation? The root of sigma x minus x bar, the whole square upon n. In case of future probability is given, future info is given. In case future info is given, then what will happen? Again, we have to calculate the variance and standard deviation. Same thing, x minus x bar the whole square multiplied by p, and root of x minus x bar the whole square multiplied by p. Am I right? Am I right? Okay. Am I right, guys? Yes. Are you right? Yes. Are we clear systematically? Are these 7 formulas fit in your head? First session portfolio, and you are thoroughly clear with all these 7 formulas. Will you ever in your life, give me a promise, will you ever in your life forget these formulas? Never ever. It's a deal, it's a promise. Yes, not only of the live students, I want the same promise for my Google Drive students as well. Please drop me a WhatsApp if you want that. Yes, sir, promise the 7 formulas will never ever be out from our head. Okay, on that positive note, time for me to say hasta la vista. Thank you so much. Take care. Bye bye. Keep smiling. A lot of new things coming your way in this chapter. The trailer has begun. Thank you. Good night. Thank you, Meghalakshmi. Bye.